today I want to help you understand the fees and charges associated with investing. Now, this is something that I tell people to make sure that they are keeping in check with their investments. When you first start out, you might be nervous about using the platform or worried about the risk involved. But as your pot starts to build up, you need to turn your attention to the fees that you are paying, as this can seriously erode the profits that you make on that money. It's really important when you're investing to make sure that you are trying to maximize the returns that you get. Now, you don't need to do this and looking at charts and, watching the market all day and every day. I'm a huge advocate of the long and steady, wins the race sort of route. But you need to make sure that you have the basics covered, and making sure that you understand the fees associated with your investments is important. So in this, I'm going to break down some of the terms and hopefully show you why you need to be paying a bit more attention to this. Now, this is not financial advice. I'm not here to tell you exactly what to do with your money. I'm here to give you the information so that you can make the right choices for you. So why is it important to pay attention to those fees? So there was some research that was done by Vanguard and it was published in the Times. And what it said was if you invested £100,000 and you just didn't make any money on that and you just paid the charges associated with that account, that just a 1% difference in that could cost you 25% of your portfolio. And that is significant. That is a huge chunk of your money that you could be missing out on. Therefore, it's really important to make sure that you know what these terms mean and you know what the charges are associated with your investments. And once you know these things, that you do your best to minimize them in, the best possible way. So there are several charges that can come when investing. Now, there are a few ways that this might, manifest itself in your particular investment account. So different platforms may use different fees in order to make some money. And it's perfectly reasonable that these platforms want to make money. You want to make money, that's why you're investing, and they want to make money and they've created something that you can use to actually access that platform. So it's perfectly okay that they have these charges, but they can come in many forms. One way that they can do this is with an admin fee or an account management fee. So this is something that, say, someone like Vanguard would use. So Vanguard have a 0.15% account management fee. And so what this does is that means that they look after your account, they make sure that there's a nice website that is easy to use, that there's somebody on the end of the phone if you need to ring them up. That's what that fee is for. Now, this is done as a percentage. So in the example of Vanguard, they have this 0.15% fee, but that's only up to a certain amount. And other investing platforms may do a similar thing. Now, the alternative to this is a platform fee. So this is seen with accounts such as Plum. They have fixed monthly fees. So I think the minimum one for Plum is £1, and then there's a £2.99 one and a £4.99 one that gives you different options within those accounts. So rather than taking a percentage of the total amount that you have in your account, they charge you to access the investing tools or to access different stocks and funds. So these charges are just these platforms, so, Vanguard, Plum, Nutmeg, Wealthify, all of these have different ways of making that money. So they could charge you this admin fee or this account management fee, or they could charge you a fixed rate platform fee. Now, there are also fees associated with buying into particular funds. Now, when creating a fund, there's got to be some people involved, the people that decide what funds, what stocks are going into that fund. They decide, if you want an ESG fund, there needs to be some people that are researching that. And this is typically why ESG funds or green or ethical funds cost a little bit more. Now, some of the more simple, global tracker funds, these require a little bit less work. So they might be some of the cheaper funds available. Now, normally these come as a percentage, and that percentage can range from anything from about 0.05% for some of the really passive tracker funds, or up to, in excess of 1% for actively managed funds. So this is when there's a team of people picking out exactly what goes into this fund. So obviously this is going to be in addition to your platform fee, but normally you won't ever see this money. This will just come out of any returns that you make. You want to make sure that you are picking funds that not only align with your morals, but also have reasonable fees associated with them. Now, for me, I quite like some of the ethical funds, so I'm willing to pay a little bit more to access those. But I need to know that that comes with a compromise on the potential returns that I can make because of the fees involved. Another fee is a trading fee. So this is literally a fee to make a trade. So whether you're buying or selling, there will be a charge. So there are some platforms out there. So for example, Hargreaves Lansdown, they will charge you when you are buying stocks. They don't do this for funds, but if you want to buy individual stocks, there is a charge associated with this. Now, that charge for Hargreaves Lansdown depends on how many, trades you made in the previous month. And the fees for that start at $11.95. There actually are lower ones if you've made more trades in the previous month, but you could be paying £11.95 to buy into a particular stock. So you need to be aware of that. If you're maybe buying like 20 quid's worth of a particular stock, but 12 quid of it is going to the fee, you've actually only invested £8. It's going to take you a long while to double that money and a bit to get your full £20 back. So you need to be aware of those charges. There are plenty of fee-free trading platforms out there. So if you are looking for individual stocks, then just make sure you check on those fees. You also need to factor in things like pensions. So when I talk about investments, I'm normally talking about your general investment accounts or your stocks and shares ISAs. But these fees are also involved in your pensions. So you may want to check up on things like your fund fees, or if there is a fee for actually buying into your pension in the first place. So Nest, for example, the National Employment and Savings Trust, I think it stands for, actually has fees for paying into your pension. So you may want to look at what is involved in this and what the ongoing fees are. When looking at your investments, you want to make sure that these fees are not eating into what you've put in a significant way. So for example, you may think that a £5 per month fee isn't that significant. But if you've only got £100 in that pot, it will only take a few short months before you have practically nothing. It's unlikely that you're going to grow your investment quicker than that fee amount. If you had 100,000 in there, well, probably 5% isn't too bad. But you need to weigh these things up. And like I say, you need to do that whether it's your stocks and shares ISA or it's your pension. And it's worth looking into these things. Now, there might be other fees that you have associated with this. Say, for example, if you sort out some sort of financial advice from an FCA regulated independent financial advisor, they might have a fee attached too. Now, this could be a fixed fee, so you pay a few £100s up front, or it could be an ongoing percentage. So you need to factor this in too. And remember that information that I gave you at the start, that just a 1% increase on the fees could actually corrode your pot by a significant amount, up to 25%. So you need to watch out for these things. So one statistic from Vanguard said that a 2.5% fee on an account that isn't growing could lose you over 50% of that pot in a period of 30 years. So you need to watch out for that. It is really worth just spending some time looking into the fees that you are paying and making sure you have minimized them while still achieving what you want from your investments. And let's face it, most of us just want to make as much money as we can while staying on the bright side of our morals. Thanks for watching this video. If you want more information about investing, then please do check out my investing playlist. I also have lots of other information about all different areas of your money, so do go check those out as well. Don't forget to hit that subscribe button. I have 2 videos going out every week, and I would love to have you join me to watch those too. Big thank you for watching, and make sure you check me out on my other socials. See you later. Bye.